Welcome back, everybody. So today is the 17th of December, 2024, and I just thought I would share some insights into what I have been reading and some economic data, what is coming out this week, and some things what I feel were missed last week, especially when it comes to BlackRock and Bitcoin. I didn't really see many people talking about what BlackRock released in regards to Bitcoin sizing and positioning in portfolios, so I'll discuss that today. Also as well, I appreciate everyone's feedback on Instagram. I'm still having a lot of issues on Instagram in terms of reach, so I do prefer, I do kind of prefer it if you can kind of like and comment on this video, because that massively helps me out significantly. And anyway, let's get into it. I'm going to be discussing South Korea, the implications of what is going on in South Korea and throughout Asia. I think there's a lot of things to kind of highlight there, especially how it has knock-on effects on multiple economies, especially in Asia, Europe, and the US. Point 2 is just central banks and liquidity and what that means for rate cuts. Point 3 is just US inflation and the anticipation of what the Fed is going to be doing next. Point 4 is the European economies, updates from the UK and Swiss National Bank. Point 5 is BlackRock and their views on Bitcoin. Point 6 is the update from Google in regards to their new supercomputer chip. I think this is something what a lot of people should pay close attention to. Point 7 is just the economic data, what is coming out this week and the implications of that for markets as a whole. So pretty much last week, the Bank of Korea came out and basically said that they're going to inject an unlimited amount of liquidity into their financial system. Now, the reason why they were doing this is because their government was basically saying that they're going to be implementing martial law. Now, once that kind of hit the news and hit the market, their currency obviously saw large valuation as well as their financial market. So the Bank of Korea basically came out and just said, we are going to be stimulating to kind of support this large decline. Now, a lot of people are worried about the long-term effects on inflation and public debt, especially in South Korea. But we saw when this was happening, there was a lot of things going on in China as well, just the cascading and knock-on effects onto other economies. Now, last week, the US came out with CPI, and CPI in its simplest terms is just measuring price of goods and services on a monthly and yearly basis. So CPI means Consumer Price Index, and we saw an increase of 0.3% in November, and this was the largest rise in several months. Now, inflation seems relatively under control, that we can start to cut rates. But with this new data point, it kind of suggests that inflation could obviously be creeping back up. So why would the Fed cut rates again? Now, there is expectation. This is on the Fed Watch tool. This is just a group of analysts who are basically analyzing whether or not the Fed is going to be cutting rates on the 18th of December, what is tomorrow. And there's a 95% probability that the Fed is going to be cutting rates. Now, what a lot of people need to consider is that if inflation is increasing, the likelihood of tighter monetary policy in early 2025 is quite high. And they're probably not going to be cutting rates as aggressively as many people assume, just on the basis that if CPI just keeps going up and inflation just keeps going up, why are they going to keep cutting rates? Because the thing is, it's very difficult to manage inflation, but it's very, very easy to kind of destroy it. Obviously, you do that by increasing interest rates. Now, another interesting thing to look at is the 10-year and 3-month Treasury notes. Now, the uninversion typically signals a potential economic recession in the next couple of weeks, months, or potentially years. Now, I know that obviously that is quite open-ended, but typically this uninversion normally leads to a recession, and it has pretty much predicted a recession very, very accurately. Now, this happened in 1990. In 2000 and in 2008. You can kind of see the gray boxes here signaling the recession. Now, what is interesting to look at is when the data from the CPI basically came out, we saw that bonds started to rally on the 11th of December, and then it completely faded this entire move. And we saw that on the S&P started to go up significantly. And then obviously it's kind of faded that entire move. And obviously we're kind of springing back to kind of test that support. Now, why I find this price action very interesting is because rate cuts are often seen as a way to stimulate economic growth, which could increase inflation. And inflation obviously erodes the purchasing power of bond payouts, leading to lower bond prices in the future. And you can kind of see how the expectation that the Fed cutting rates is significantly good for equities and overall risk assets. You can kind of see this being priced into the S&P, obviously NASDAQ, etc., 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 whereas bonds are taking an absolute hammering. Now, obviously, with the increase in the money supply and the expectation of cutting rates, these bonds are going to be going down in value. And the thing is, there's been a kind of a big talking point over the last couple of years around the pension crisis and how a lot of these pensions are significantly underwater because of issues with just demographics in terms of people living longer and the expectation that you can kind of get a pension when you come to retire. But the thing is, a lot of these pensions are significantly underwater. So the thing is, I think it kind of requires another video to explain what is going on in pensions, but I just want to make it clear that looking at how pensions are funded is very concerning, especially when you start to see bonds significantly underperform. I just thought it's interesting to actually look at, and I would definitely recommend people to look into this. Also, as well, there's a lot of expectation from the European Central Bank in terms of cutting rates in December. They're expected to cut 25 basis points to stimulate their struggling economies like Germany and Italy. Now, what was also interesting last week is that the Swiss National Bank cut 50 basis points, what was the largest reduction in nearly a decade. Now, this is a reflection in terms of what they feel is deflation and just a sluggish economic activity. Obviously, cutting so aggressively will have a lot of volatility for the Swiss franc and cross-border trade. Now, this rate cut is the largest since 2008, signaling deep economic concerns. What was also interesting last week is that the UK economy shrank by 0.1% in October. Now, the thing is that I personally don't find this that insightful. And the reason why I say that is because I run a few different businesses in the UK, and we have clients in the US and the UK. And every single UK business who I specifically talk to, they all are very pessimistic and very negative on the UK economy, just in general. Now, one of the businesses what I run, we manage between about £500,000 to £600,000 on Google and Facebook ads every single month. Now, the reason why I say that is a lot of the clients across the board are basically restricting their spending and saying that they're having a lot of issues when it comes to sales and staffing. Now, this is not necessarily just a cyclical trend. This trend has been going on for the last couple of months, and we are seeing a lot of reductions in the amount of people who are wanting to spend money on Google and Facebook, especially when it comes to advertising. Now, a lot of the concerns what they have is in relation to people not having enough money to spend, and the prices of goods and services are just really, really high. Now, obviously, the UK has a lot of issues going on, and I just hope they can kind of resolve it. I think a lot of these countries are very dependent on their legacy industries, and I just think if a country just kind of embraced something what was a large trend in terms of innovation or technology, I think we would see a large increase in GDP, especially if let's say the Bank of England or London became a large hub for cryptocurrency or Bitcoin. I think that would have massive implications for the UK economy. But again, I don't think that necessarily is going to happen. You can kind of see smaller countries obviously adopting newer technologies and newer innovation, and that is attracting a lot of capital to them countries. Now, what was also interesting last week is that BlackRock came out with this paper on the sizing of Bitcoin in portfolios. Now, this is a very, very interesting article, and I don't think, like I was saying in the introduction, I don't think a lot of people paid too much attention to it, but it just kind of goes in terms of how having a certain allocation in your portfolio to Bitcoin can significantly increase the overall portfolio gain. And yeah, I would just massively recommend people to check this out, especially if you're into crypto and you're looking at getting exposure. So this can kind of give you some insight in terms of how well Bitcoin can help increase performance and mitigate volatility. What is also interesting, I know that I mentioned this in a previous video, but just looking at the Bitcoin treasury. So this website is called bitcointreasury.net. I am not affiliated with this website at all, but you can kind of see the aggressiveness in terms of institutions coming in and buying Bitcoin in the last couple of months. Now you can see all the publicly listed businesses with Bitcoin on their balance sheet. And obviously you can see at the top of the shop is Mr. Saylor, the Bitcoin whale, with 439,000 Bitcoin. And what is really interesting is it shows their Bitcoin hodl in comparison to their market cap and how well they are performing in comparison to other publicly listed Bitcoin companies. Now, what is also interesting on this is that it shows the amount of ETFs what hold Bitcoin, as well as private companies and different types of governments around the world. So you can kind of see like the United States holds the most amount of Bitcoin in terms of government entities. China is a second. And then you've got the United Kingdom, Ukraine, and all these other different types of institutions. And I just think it's very interesting to actually look at, especially on a weekly basis, to see who is actually buying Bitcoin. Now, another area what I found very interesting this week or last week is that the growing demand for stable coins, especially like digital dollars. The stable coin market cap hit 200 billion. Now, this only came out on the 12th of December. Now, if you look at that, where we are today, we're currently at 212 billion. And obviously this has gone up 12 billion over the last couple of days. And there's a massive demand for digital dollars. And I just think this is a really large trend, especially if you're in fintech and you're looking at getting exposure to, let's say, fintech businesses, because this is going to be a massive disruptor, especially over the next couple of months, if not years. Now, we also have news from Google last week, and this is in relation to their new quantum computing chip. Now, this chip is very, very, very powerful. It can do a lot of computation. And now a lot of people are very worried about it, just in regards to it having the ability to potentially crack encryption and different types of security protocols. So a lot of people are talking about how these quantum chips could potentially hack the Bitcoin network and SSL and just different layers of security online. And the thing is, this is a large possibility. And I think I'm going to do a video on this, just explaining how powerful these chips are and what that means for the Bitcoin network and just different security protocols. But I would definitely encourage people to check out what Google is doing with Willow and the quantum chip, what they have just recently developed. Now, this week in general, we have a lot of economic data coming out. I mean, obviously it's Tuesday today. So we have a lot of things coming out from the UK, from Europe, from Canada, just in regards to CPI. You've got the housing price index, you've got inflation numbers coming out of Canada. You've also got retail sales today from the US. Now, on the 18th of December, we have the Fed, who is looking at obviously cutting interest rates. We also have the Bank of Japan, and this is something what I would just consider to look at, because the last time the Bank of Japan started to increase their interest rates, we had a large correction in the US markets. And the reason why this happens is because a lot of people borrow money in Japan and then put that money to work in the US. Now, obviously, when Japan increases their interest rates, what we see is that the cost of borrowing obviously goes up. And obviously, if you're highly leveraged in Japan, you need to sell assets in other countries to pay down some of that debt. Now, obviously, if the Bank of Japan decides to increase their interest rates, I think we would see a lot of volatility, especially in US markets. We also have the Bank of England coming out and announcing rate cuts this week, what is obviously something to pay attention to, and just how that could potentially impact the pound and UK markets. Like I was saying, we have a lot of economic data from the US, just US retail sales, housing data. We have the Q3 GDP reports this week, the jobless claims, and earnings reports from FedEx, General Mills, Nike, Micron Technology, and a few other different companies. Now, obviously, I will be posting all these updates on my Instagram, but like I was saying in the introduction, I do have some issues. Now, I do have a lot of issues on Instagram just in terms of reach, and I am finding it very difficult just in terms of getting support on Instagram. So I'm going to keep pushing this YouTube channel, and hopefully a lot of people get a lot of value out of what I do on here, because it is very time consuming to actually do. Obviously edit videos, put everything together, different types of software, etc., etc., etc. So like I was saying before, if you could like and subscribe, that would be much appreciated. And obviously to the 4 people who actually watch me, I hope you're having a lovely day, and I'll see you in the next video. Take care. Bye-bye.